And welcome to the LV Home Experts Radio Show, where we talk about real estate and financing. Today, we have a very special guest. She specializes in new home purchases. So if you are a first-time home buyer, today we have a special show just for you. We're going to walk you through the process of purchasing a brand new home and what to expect when you purchase a home out here in Las Vegas. So our special guest today, the myth, the legend, the one and only Jennifer Littlefield with, what was the name of the company?
Forever Home Realty.
That's right, Forever Homes Realty. Like, I was doing this so good, but I literally brain fart. I don't know what happened.
No,
Sorry.
that's all right. Forever Home Realty, huh?
Forever Homes. I actually like that name, Forever Homes.
Thank you.
That's nice.
So I want to get right into this because we don't have enough time. You guys already know Dan French with Guarantee Rate. Again, if you guys are interested in getting financing, go ahead and visit lvhomeexperts.com. There's a link in the website, financing. Get started there. Get you approved. You can start looking at homes. So we don't have enough time because there's so much questions I want to ask you. And I want to get right into this. How long have you been selling a real estate for?
Just about 3.5 years now.
3.5 years? What made you get into real estate?
Well, I actually think real estate kind of found me. I moved in Vegas 2010, and I've been managing medical practices. And so I started recruiting doctors to work for our medical practice, and they needed a place to rent or to move into. And so I would help them getting in touch with agents. So I felt like, why don't I become, a real estate agent so I can assist with that as well? And so most of my biggest deals were actually doctors, looking for homes to purchase here.
Wow, that means her clientele is all doctors.
Yeah.
That's a good thing, right?
That's a good niche. I mean, that's,
I know.
You look at doctors. Doctors
got money.
Always got money. And they got options.
They got loans too. Some of them, right? So a couple of them will need special. They have like a physician loan program.
Yeah.
Okay.
Yeah, you're absolutely right. There is loans out there.
Talk
for
about
doctors.
that. What kind of loans was she talking
Well,
about?
I mean, there's certain programs and stuff out there that doctors get certain perks, benefits on. How much they need to put down. Also, the rates sometimes better.
Yeah.
So there is some programs out there for that. But yeah, you're right. I mean, doctors though, like I think you want to. That's a clientele that. It's like, it's like once you get into a niche like that, it's like you got a nice stream of people that are probably going to qualify, or they're going to probably have cash to buy a house. It's like a really good niche to start with. Most people start off and they're just trying to get leads,
Yeah, exactly. $80,000 deals. I remember those days.
It's crazy.
We literally were grinding it out. Would you take a $80,000 buyer? You better say yes.
Yes. Hell yes.
There you go. So
absolutely.
Let me ask you this. Because you started 3 years ago, did you already own a home and became an agent, or you were an agent then purchased a home?
When I got my license, I already actually owned a home. Interesting that you brought that up, though. I purchased my home as a owner will carry.
Oh, wow. Interesting. Did you have bad credit or something?
Yes, I did.
You Asian. Come on now. How you get bad credit?
You know, I'm your pretty typical Asian where your parents, my parents expected me to go school all the way.
Yeah.
So I had triple digit school loans.
Oh, wow.
So you can't really get a home loan when you have school loans that high because I had to go college all the way.
Okay.
You know, got my master's and came out with a lot of debt.
Yeah. It's tough, you know, because that trade-off.
So how was that process with, was it an agent that you worked with?
No, I actually, well, it was an agent, but my mom had a house that I was staying in right after college. And then I saw for sale sign by an agent, but I approached the homeowner directly.
Oh, wow.
And the husband was really sick, and it was a husband and wife. And so they really wanted to sell, and they offered me like an owner will carry. And at the time I didn't really even know what that was.
What is that for the viewers?
Go ahead.
I'm asking you.
She's asking, she's looking at me.
Do you remember what owner carry was?
Yeah.
Okay. Just kind of weird. Wow. I don't know what you're looking at. Do you know what owner carry is?
Me, yeah.
Oh, what is it?
Basically, you're paying payments to the owner under a certain circumstance where you take over the actual house itself down the road, you know?
And typically there's a term. It could be a 24-month term where you're going to have to go ahead and refinance that. And typically that's with people, they don't have par credit, right? Not enough to get a loan. So they'll end up doing that because they have cash. And within those terms, let's say the 2-year terms, by then you should be able to fix up your credit and go through traditional financing. The reason why I brought this up here is because, you know, when I bought my first home, right, with the agent, I felt like I was not educated, right, as far as purchasing a home. I just kind of went through the process with that agent.
Oh, yeah.
So, and that's the reason why I'm bringing this up. And you typically work with first-time home buyers. And I think this is very important for the viewers out there, especially a lot of our clients are first-time home buyers. Like, how does a first-time home buyer actually get started? Like, they have no clue to like where to start or what to do. Typically what happens is they find a home that they like and they just call, right, an agent that's representing that home. Then at that point, that agent will try to like convert them and try to help them out. So can you kind of like show us that process or explain that process? Like when somebody calls you, they're a first-time home buyer, like what is it that you do to set yourself apart from other agents?
Well, most of my clients so far, though, come in with a lot of immediate questions about their financials. You know, like I have 20, 30% down.
Oh, wow. What kind of first-time home buyer is that?
Well, Asians. Yeah. Okay. So my background's Asian. They have a lot of cash on hand, but honestly, they don't have documentation on like supporting income.
Yeah.
So that's the challenge. You know, they always kind of say like, hey, I have saved up 20, 30%, but you know, how can I get a loan? But I really want to buy. So that's kind of like the calls that I get, family, friends referrals. So it's always about educating them right off the bat that it's not just about having 20, 30%. You know, there's a lot of different components that you have to get pre-qualified, and then I get them in touch with a lender.
Okay. So it sounds like you have to work with a lender that obviously knows how to piece this deal together, because you have to have that relationship with a lender that you feel confident enough where you can pass your lead along and you guys can get together, right? And obviously you need to have a good agent, a good lender that knows how to put the deal together, because there's so many scenarios. It's not, I have $30,000, I can put this money down and get a home. There's so much involved as far as the credit, right? If they have the money, is the money even in the bank? How do you season the money, right? So you have to do like creative financing. You run into that all the time, right, Dan? Can you kind of explain that a little bit?
Yeah, it's just like she said. They need to know where the money's coming from, where they're going to source it. You can't just give money to somebody and say, hey, go buy me a house. So sometimes you got to check that out. You got to say, well, it's okay to get a gift though, right? You can get family gifts, right? People are going to give you money. But let's say if you just had money and it was just sitting somewhere, or it's in another investment, let's say it's tied up in something else and cryptocurrency, whatever it is, can you still get it done? And I think that's the challenge. The challenge is there's so many varieties of ways of people like to invest their money today that is it liquid, right? And is it sourceable? And can you verify it once you go into underwriting? So I think that's a big challenge.
Okay, so what happens if, a first-time home buyer comes to you, doesn't have that kind of money, right? What do you do from there?
If they don't?
Yeah, I mean, if they don't have like 20%, but they got like 5%, because there's all different type of programs out there, right?
Well, getting them in touch with a lender will be the first step, obviously, and then kind of showing them what options they have with their current financial situation. Okay. But I think, like what Dan said, it's so key now to educate on where the funds are being sourced from. Because people don't understand that, they just think that they can have it and making sure it stays that way until closing.
I got a question for you guys. You can answer it too. Why do you think that is that way? Why do you think a bank wants to source it? You might not know it. I'm just curious.
Because they want to get paid. They want to make sure they get the money.
Why do you think that is? Why do you think a bank is saying we need to know where that money comes from?
To make sure. Well,
so let's say this. So when the bank used to have people that were straw buyers, and so if you have somebody that's an investor, say they got millions of dollars, $5 million in the bank, they want to buy multiple properties, right? You can take somebody's credit and you could take all their information and say, look, I'll cut you a check or I'll cut you some money. I'll front the money, but I'm going to give you the money and you can go buy that house. Guess what? That person buys that house. They're no longer living in that house. Now you're buying an investment property at 5% down, 10% down, and those people leave. So the reason why that's so important is because they want to eliminate issues that come up with what's called straw buyers, where people are buying homes for people. So if they have to source it and verify it, that's why it's restricted.
I mean, I would have to agree with that. But I mean, look, at the end of the day, the banks want to make sure that they get paid. It doesn't matter because that still happens today anyway, right?
Yeah, but a bank, if it goes through an underwriter, they're gonna seize it right there. So it will never get to a point where if you can't source it, it's not going to get through approval. So that's how they justify it.
So now once somebody's approved, okay, do you have like a buyer consultation that you go through, or?
Yes.
So kind of explain that process and what is a buyer consultation and why is it so important?
Well, everything to me is always explaining it in less realtor talk, because it's their first time. They're figuring out things from the beginning, what steps to take, a lot of hand holding. Yeah. And honestly, some of my clients are minorities, and so English is a second language. So a lot of terms that we use are, so in the buyer consultation, I always walk through A to Z, what will happen, and say it in terminology that they'll understand what they can expect. And I always explain to them things that may or can go wrong, so that it's no surprise to them. And then that way they're less likely to be, afraid of what may happen. If it does happen, because they're like, oh, she already kind of warned us this would happen, especially with appraisal inspections, so I go through the whole process, and I even talk about timeline.
See, I think that you made a good point as far as communicating with buyers, because what happens is I see a lot of agents and lenders do this, right? They're in the business 24 hours, and we talk our own lingo and our own terms. The average buyer is not going to know what we're talking about, right? Due diligence, period contingency, final contingencies. They don't know that. And you made a very good point. If you can literally break it down and explain the process, how things work, and as they go through the process of purchasing a home, they can say, oh, that's what Jennifer was talking about. Okay, this is where we're at, right? And I think that's great, and that's perfect. So now let's talk about the home search, because one of the things that I get is that for a first-time home buyer, they want champagne taste with a beer budget, right? You know what I'm talking about, right? You heard that terms a lot, where a first-time home buyer wants everything in a home, but let's just say today the median price point is at $410, but they're only approved for like $400, but they want everything. So how do you combat that? Or, obviously it's through education, but kind of like walk us through that process as far as the consultation part. Like, do you show them what's going on physically on the computer?
Yeah, I know a lot of agents probably wouldn't take clients out that don't have, like a buyer's agreement.
Yeah.
But I still do. I like to give them just to get to know what our market is, because there are people who still think that Vegas home price are low, you know, and that's just not the case. It's changing literally, every day. And so when they say they can buy around 300-400, well, I'll show you what 300-400 looks like.
Absolutely.
Now,
And they get pretty disappointed when you show it to them.
Yeah.
Exactly. So sometimes it's just really showing them, seeing what that looks like and then what they need to do.
Yeah.
And some of them will find a way to get more money together, because sometimes they don't disclose exactly what they'd have.
Yeah.
They just tell you ballpark what they know, and they may qualify for more programs or something like, other options, or they have gifts like you mentioned earlier that can help them increase their, price point. So that's part of also, because in the discussion, most first-time home buyers tend to kind of already tell you how much they can afford to buy or would want to buy.
Yeah.
And when you ask them, they haven't even spoken to any lender yet.
Oh, wow. So would you take out a buyer that is not approved yet?
I would, but it depends. It depends how I got that buyer. If it's a family friend referral or if I verify, I would not say that I would take every person.
And I'm sure you wouldn't show 20 properties either.
No, I would not.
You better not.
and I'd like to point out, honestly, this is just a side thing.
Yeah.
I think it's very important that we all put it out there, is that there are buyers that are not serious buyers. And I'm not talking about like just looking around, but they are out to target women. So I do encourage to really do, your search. And also sometimes if it's a new lead online or something that just is completely ghost random, to bring another agent or just a family. Like sometimes I bring my husband, to be honest, just because I want to make sure that we're safe. We're looking at properties. We're seeing each other for the first time. And I've heard it within my own brokerage too.
I've never really thought of that because I'm a guy, but I guess that would make sense if you were a girl. You just don't go out, right? Unless you bring them in, you sign a buy broker's agreement, you get some sort of ID card, because obviously a girl, it's more vulnerable, right? I just never thought of that.
I mean, and
that's a good
I
point.
just was talked about this the other day about agents that are women. All of them are great, right? Everybody that's an agent is great, but they're targeted by a lot of male potentially people because attraction, right? Sex appeal. And, a lot of agents, they have, they look good or whatever. So they'll reach out to them and they do want to buy a house, right? But they're also going to put their feelers out on other things too, based upon sex sells, it does. And it's based upon image.
And that's why I always have girls on my show.
I was wondering that.
No, we got a couple dudes too as well.
No, but it is even sellers too.
Yeah.
Everybody.
A gentleman will be claim they are interested in looking to sell their property.
Yeah.
Get the agent to come. I told because she's fairly new, I advised her, I'd be more than happy to go with you or have someone that you trust go with you. And because I said it's a red flag, just the way she was telling me how he found her on TikTok and stuff like that. And so then she said, "Oh, I'd like to get you in touch with, my agent." Cold. Stop responding.
Yeah.
And so she's like, "You're right."
Yeah.
And I said,
I think too, and this is just maybe something I'd look at, but in some cases, maybe women, look, we got a lot of strong women, but maybe there's a perception that it's easier for them to be controlling, maybe, or convince them to do what I need them to do in a sense, right? Not always, but I would say in a lot of cases too. So I think sometimes people approach it that way too, like I can control the outcome, like versus somebody that has been in the business for a long time or somebody that shows a dominant appearance, because those things do play a factor in who you work with.
Now I want to go back to if a buyer is not realistic on what's out there, okay, what happens from there? Putting you on the spot. Do you just fire them?
You just say, put them on a search and I'll call you in 6 months.
put them on a drip. No, refer them to another agent.
Referral fee?
referral fee 25%. But I mean, obviously you're going to put them on some sort of a drip campaign, right?
Yes.
And sometimes what happens is, for me, what I've noticed is that when I educate the buyers of how a real estate transaction works from A to Z, right? All the fundamentals, and I show them exactly based upon what you're approved for, what you want, right? Just doesn't exist. So I can't get you 10 out of 10, but possibly, because I already know my market, right? Depending on their price point, what they're looking for, I can say, hey, I can probably get you 6 out of 10, right? Here's what you can get. Now, I still can get you what you want. Let's punch it in. But look, so now the price point is higher. So now you have to ask yourself, what's most important to you, right? Is it the price, or is it what you want? So now they can make that decision versus you just telling them, hey, it's just not going to work. And for me, I find that to work really well. Yeah. Now, when a buyer, let's just say they pick a couple properties, like how many properties do a normal buyer actually like picks, and how many properties do they actually look at?
I would say like a good for me is at least between 3 to like 7 max.
3 to 7?
A 5 is a sweet number. Yeah. Okay. Definitely a couple more than 2 to 3. Mm-hmm. If anything, like when they start staying 20, they just get really exhausting, so I wouldn't reach up to that much.
So obviously, it sounds like you'd probably break it down and say, hey, give me your top 10, right? Mm-hmm. Now, let's say as far as like these 10 properties, how long does it take for you to look at all 10 properties?
What do you mean how long? Like how long?
Does it take like all day to look at 10 properties for a client?
More than a day.
Oh, really? That's a lot of driving.
More than a day.
I'm 10 properties. I'm cranking it out like, boom, we're writing up a contract now. Stop playing.
Do you do 10 a day?
Oh, no. Basic, I'll just narrow it down, right? After I narrow it down, but if we got to do 10, I'll bang it all out and we're writing an offer. We ain't playing.
That's
you know what I'm saying?
That's the added right there. It's like, hey, we'll do 10, but we're writing an offer.
Yeah,
I'm not doing 10 and then not writing an offer.
Yeah. You're here to buy a home. Let me help you out. Right. This is what's available. And I think that's what kind of sets other agents apart, where if you educate your clients of what's going on and you draw the line on the sand and explain to them, hey, this is how it works. If you don't trust me or you don't trust the process, then right now it's not going to work for us. Mm-hmm. You got to go.
It's a relationship.
Exactly. That's all it is. Here you go. You got to work with somebody else. And sometimes I get buyers like that where they're so unrealistic and I say I can't work with them. You know what? Jaw just drops. They're like, you're not going to work with me? Yeah, because you don't trust me. You don't trust the process, right? And sometimes it has to be like that. But then they'll go out and they'll find out like, oh, man, it is probably true what you said. Yeah, because we know our market. We know how things work, right? We know based upon the price point you're at, you don't have that many options. You're probably not going to be able to ask for closing costs. It is what it is. Like I have a gentleman that's coming in this week, Friday, and he's like, yo, do you think I can get $8,000 with closing costs? It's a case-by-case basis. However, you need to go into the mindset right now that you're paying for your own closing costs. Because if I call and there's 4 offers on the home, there ain't no lowballing. It is what it is. So the question is, do you really want to buy a home, right? Or you just want to go look? There's a difference.
I think they're trying to hit a home run. You know what I mean? It's like, okay, well, I want to buy a house. Yeah. But I also want to feel like I'm getting a deal. Yeah. Right? Like I'm getting something back in return too. Like, yeah. So look, it's hard because I think a lot of people, they go into a mindset that you tell them this is what the market is. Yeah. And you explain to them this is what's happening. But people still want to do it their way. And they also don't like to be told no. Yeah. You know, if you tell somebody no, like, hey, it's not there, they really start to get defensive and like, well, I'll do my own research or I'll check it out myself. Yeah. It's like, don't you think we would want to get paid too, right? I mean, we're telling you this to simplify it so that way we're all not wasting our time.
Now, when you go out with a buyer, they find a home they like, right? And say, hey, you know what? I like this home. What's the next process from there?
I'll get them in touch. Actually, I get in touch with the lender.
Okay.
I like to let the lender know kind of a heads up that we'll be writing an offer. Is there anything? And I'll send them the MLS or the details just to make sure that they kind of see what they're looking at, what contingencies that we need to be, highlighting specifically. But for me, I like to get in touch with the seller's agent.
Okay.
and just get some feedback on what kind of activity's been going on.
And why are you doing that?
Why am I doing that?
Yes.
To hopefully get ahead. No.
It's part of your negotiating skills.
Yeah, just to see, you know, what the seller's actually looking for, what they're motivated.
Yeah.
Yeah.
And how important is that when you write up a contract?
Actually, it's key
Is it?
for me.
Yeah.
And I always write a narrative. It's been helpful to me. I don't know if that sounds cliche or not, but I've always write about my buyer.
You started like who it may concern?
No.
I'm just playing.
Dear. No.
Dear. So whom
But
it may
you know,
concern.
just to say, introduce the buyer, you know, because I feel like there are times where the seller is very also concerned about who's gonna take over their home. You know, especially the homeowners who have pride in what they put in the home and knowing that it's gonna be a good family, or you know, the story behind it, because wherever they relocate or move to, they kind of can share that, you know, this person bought my house or whatever. So that has helped me a lot. And I would have agents that would give me feedback that I beat out those offers because of my letter and how interesting that, you know, that they would be able to work with a family like that.
Well, thanks for the tip. I'm going to start using that from now on, here on out.
Yes.
Now, what's great about that is what you're doing is you're leveraging out and you're actually representing your buyer, right? Because now what you're doing is you're contacting the agent and you're filling the agent out as far as if there's any deals, right? How low you can go, how motivated the seller is, right? So basically when it comes to negotiating a deal, it's all about skill level, right? It's about playing poker, but I want to know exactly what you have in your hand so that way I can always reposition, right? Because if there's no offers, right, you run the comps. If it's overpriced, then we know we're going to write an offer lower, right? Sometimes you could possibly ask for closing costs. Sometimes you'll look at the history of the property and see exactly what they bought it for. Based upon their motivation at that point, you could possibly write it a little bit lower, right? Sometimes the agents will come out and just say, hey, give me an offer. Okay, so I know where I stand now. Do you see what I'm saying? And I think that's a great tactic to have. But I also want to go back to, you said that you would contact your lender, Dan, and to find out what those contingencies are. And I think this is important because, look, as a good agent, that's one piece of the puzzle. But then you have to deal with your buyer's financial situation in order to structure that deal correctly, right? To satisfy the seller and also on the loan side. So, you know, talk about the contingencies, and Dan kind of explain that too as well. The reason why that's like important, you know what I'm saying?
Contingency dates on the contract?
No, the contingency. So when she contacts you and she says, hey, what are the buyer's contingencies, right? And explain what the contingencies are and why is that important for the agent to know in order to structure that deal.
I mean, it's an array of things, right? I mean, you look at
give us a scenario.
Okay, so I'll give you a scenario. Let's say somebody's buying a home and they want to buy it as a primary, but they're only able to buy it as a secondary home because they don't have the necessary things that's needed.
Yeah.
A lot of out-of-state buyers, right? So they're forced to buy a secondary home. Can they qualify with that? Now you need reserves. You got to put 10% down, right? If you can buy primary, can you support that, right? If you're working in California and you're trying to buy a home here as a primary residence, do you have family here?
Yeah.
Right? Is your kids in school here? Like what brings you here? What does an underwriter look at going, why should I give this to you as a primary residence? You got to give me some supportive evidence.
Now, let me give you another example. Let's just say I'm doing a deal right now, right? I know my buyers qualify for $400,000, and normally I like to find out what the contingencies are up front so that way I can structure this deal. So let's just say I have a client that's approved for $400,000 based upon the condition of them getting a bonus in the next 30 days, right? So we know in order for me to get my clients approved for $400,000 to go under this contract, I need to make sure that we are all on the same page as far as my clients getting that bonus. Sometimes what happens is clients may be interested in still moving forward, taking that chance, but knowing within our 35-day closing that our timeline as far as them getting that bonus, they may get that bonus in the middle of that transaction, right? So that's the reason why we need to know these things, because as a good agent, what happens is we know the position of the buyer, and sometimes we can move a lot faster versus waiting. Some clients may wait till the end until they're fully approved where they meet all their conditions. So it's a case-by-case basis, and that's what makes a good agent, where somebody's very interested in buying now or they find an opportunity on the home to pull a trigger, we can actually piece that deal together, right? And that's where I say this is so important, where when you work with an agent, that agent has to have an all-star team, right? You got to work with the buyer, and also the buyer also has to communicate with the lender. It's those three, right, that makes that, you know, that dream team. And I think that's very important. I really wanted to express that. Any thoughts?
No, I concur.
I also concur.
I don't know if I was just rambling on, because sometimes I do that.
No, it's all good.
Emphasis.
Yes.
Yeah.
But I mean, what are your thoughts on it? Do you think the same, like you have to have that dream team? So elaborate. Do you have that too?
For sure, because at the end of the day, like you mentioned earlier, time, you know, we're not here to waste anyone's time.
Yeah.
And so we all have the same goal. You
Yes.
know, a buyer wants to buy and a seller wants to sell, and nobody gets paid, nobody gets a house if we all don't make it to the end game, right? So it takes a team, you know, and if something goes wrong, and it kind of always does, something goes wrong in this.
Hey, I have another scenario. I got another scenario. Okay, so here's one. Make it quick an example. Let's just say if you're approved for 400, right? Based upon the debt to income ratio, right? We already communicate that the HOAs can't go higher than $100. Taxes also cannot go higher than $100. But then I find a property that my client likes at $400,000, right? But before we're gonna go under contract, I already know that the HOAs are $125. Taxes are $100. So I'm over $25 based upon the debt to income ratio. So like you would contact your lender to say, hey, can we actually make this deal done? Or can we make some sort of minor adjustments based upon that debt to income ratio to get the extra $25? Is that a good example?
Yeah. It's a really good
Does that
example.
make sense?
Yeah.
I just made that up. That was good, wasn't it?
No, that's exactly what happened in my recent deal too. Appraisal fell a little short. They talked to their lender.
Yeah.
They found some credits somewhere.
Yeah.
They made it work.
Miraculously. We got you approved. Okay, so now let's just say you speak to the agent, you write up an offer, right? This is important. When you write up an offer, there's certain ways in today's customary practices that you have to write up an offer, correct?
Like?
Well, for instance, who pays for transfer fees and stuff like that? Because reason why I'm bringing this up is because you can't go in, right? Especially if you're a seasoned agent, and one agent is going to know if the other agent's seasoned or not, right? Yeah. So you can't just go in and just say, hey, you pay for everything. When I get a contract on one of my listings, I can literally look at the email, the body of the email, the subject line, I can tell right off the get-go, this person's experience, right? From there, I could take a look at the contract and I can just say, you know what? I can tell by this agent, they do a lot of transactions. They have their boots strapped, right? They know how to write a clean contract, right? And that's what I wanted to get to, right? You're writing up a clean contract. Now, let's just say your offer has been accepted. What is the next steps from there?
Once it's accepted?
Yep. Once your offer is accepted, what's the next process with your buyer?
We order a home inspection.
Okay. So the home inspection, can you kind of cover the home inspection a little bit?
Home inspection is someone that's going to take a look, licensed. I recommend a licensed home inspector. Will come and take a look at the property, structural overview of plumbing, electrical, and just all the systems. They'll check the appliances as well.
Okay. So let's say you get back the home inspection report. There's something wrong, let's just say, with the plumbing. What happens from there?
Well, I always also like to let the buyer know possibly what kind of things may show up. Yeah. What is common depending on how old the property is, you know. Yeah. So they're not going to be surprised. Like sometimes they get obviously no matter how new the home is, you probably could still get a 20, 30 page report, you know. So oftentimes they get kind of like surprised that there's so many things wrong with the home just because there's so many pages in the report when it's really not. So it's good for me to just educate, you know, as we're getting the home inspection, these are the kind of things that may appear on the report. And I like to sometimes give them samples. I've asked previous clients, it's okay to share, just so that they see it, and that way for first-time home buyer they know what to expect, versus getting a report and then that scares them because they think like, okay, there's so many things wrong with the house.
Now, what happens if a buyer wants something fixed at that point? Do you negotiate that, or how does that work, that process? Let's just say refrigerator's broken or something like that. Like, how does that work if I come to you and say, oh, I want the home, but the refrigerator's broken? Like, what do you do?
You can request for a repair,
Okay.
or most of the time in this market, they may say no, or more likely give you a credit.
Okay. So how do you determine what that credit is? Refrigerator goes down. How do you know how much to ask for?
I get a contractor to give me some estimates, and I always get at least several estimates, so we know that the repair is around that amount of money and whether or not the buyer is okay with that.
Okay, so now I'm going to fast forward. At this point, we've already opened up escrow, right, with an earnest money deposit. Okay, and let's just say around the $400 range, your earnest money deposit is going to be about $5,000 at this point. Now you got the escrow open, paperwork goes over to the title company, it goes over to Dan, the lender. Dan, real quick, what are you doing in your process right now as soon as escrow's open?
We're getting disclosures, getting title fees, got to sign the intent to proceed, we got to order the appraisal. Obviously you want to order the inspection before the appraisal. In that case, you get the money back, right? So there is a process there. So yeah, I mean, we're all working in synergy or
in sync with one another.
Absolutely.
Now, also want to disclose is that what's really coming out of pocket up front is your earnest money deposit to tie it up into an escrow account. Once it's tied up into an escrow account, the seller cannot sell the property. It's tied up under your name. In addition to that, what's going to happen is when you do a home inspection, you're going to pay for the home inspection up front too as well. And majority of the time when it comes to the appraisal, you're also going to pay that up front. So typically that's going to run about $650. The home inspection is going to run about $450, depending if you have a pool, spa, year, date, and also the size of the home and the condition of the home too as well. So keep that in mind. So now that we gone through that whole process as far as opening up escrow, you got the paperwork, Dan. We've already done the inspections. The appraisal comes back. Dan, real quick, explain what an appraisal is.
That's just opinion from what the property value is. And the bank wants that because they want to make sure that what they're helping that person buy a home, whoever it is, that the value's there. Now, sometimes it hurts and sometimes it's good, right? Because
That's right. So let me give you an example for the viewers because we only have about 9 minutes left, okay? So the home is at $400,000, right? We submitted at $400,000. It comes back at $375,000, okay? What happens here when it's at $375,000?
Depending how the contract was written, but you can try to renegotiate with the seller.
Okay, so you're going to go back and you're going to present the appraisal, right, to the seller and ask for a price reduction. So what happens if they say, hey, we won't do a price reduction, right? We won't drop it $25,000. Now what happens? What would you do at this point?
Well, the buyer has the option to back out if it's in the contingency.
Yep.
But also at the same time, if the buyer is still willing to want to buy, they would come out of pocket for the difference.
Okay. So that means that you would have to come up with the full amount of the down payment of the loan, closing costs, and on top of that, the remaining balance. So just keep that in mind. Sometimes you can negotiate that halfway too as well. There's so many ways to negotiate that type of deal, or you can come out of pocket. So now, at this point, we've already met all the contingencies. There's one more contingency here. It's the 25-day, and this is based upon today's customary practice, the loan contingency. This is where you have to be fully approved through the underwriting. Kind of explain that a little bit, Dan.
Yeah, so, I mean, you just have to make sure that the underwriter has signed off on all conditions. You've cleared all conditions that's needed to get the loan closed. Why? Because if you don't, then you forfeit the chance of backing out.
Okay.
And that's the real reason.
So docs now are hitting title, which means that the paperwork with Dan, the underwriting company, sends everything over to the third-party company, which is the title company, to finalize the paperwork, to get all the numbers all aligned, right? At this point, 3 days before we close the transaction, what happens at this point?
Well, there's a walkthrough,
Okay.
final walkthrough inspection.
Okay.
And then there's assuming that the closing disclosures has been signed.
Okay.
So we'll take a look at the property one last time, make sure it is in the condition that the buyer saw it in, no missing appliances or any upgrades that they saw there is suddenly removed. But once they sign off on that, then that's their pretty much final commitment that they're going to move forward with purchasing the home.
Have you ran across where the seller has not moved out of the property and it's like 3 days before we close? Have you ran across that situation?
Do not jinx me.
So now we're going to fast forward it. They sign off on it, right? They go to the title company and they sign, right? Now, after they sign, do they get the keys right away, or how does that process work?
No, after they sign, the docs will go back to, the lender will get back the original docs, and then they will fund it.
Mm-hmm.
And then once it's been funded, title will need to review everything one last time, and then once they're ready, they'll release to record.
Okay. Now, I got a question for you. Do you go to the signings with your clients?
Yes.
Do you? Man, you're a good agent. I used to do that all the time. I'm so bad. You're making me look bad right now.
Well, I mean, no, you're not bad. You're like one of the best. You're the best in Vegas.
I'm going to ask this question. Do you think a majority of real estate agents, including lenders, but do you think that they opted out because of COVID, where you see it less and less now?
Yeah. I actually don't think that it makes any agent good or bad.
Yeah.
It's really how you feel like you want to run your business, right? We're all independent contractors, and that's just part of the service that you provide. If it makes sense for your clients and you, then you go there.
Well, the reason why I don't go anymore is because we're doing a lot of transactions, but the most important thing to me is actually this final settlement statement. That's what I actually look at. And what the final settlement statement is, it's between the buyer and the seller and all the fees and what you're paying for, right? And how the contract is negotiated. I look at that before I say, hey, let's move forward and we record. Then I send out an email to the title company, hey, we're good to go. Go ahead and release record. So that's the most important thing to me, because 95% of that paperwork has nothing to do with me at this point. It has to do with everything with the lender. So that's the reason why you go, because if anybody has questions on the lending side, because like I said, it's 95% of the financing. I don't know any of that. That's not my specialty. So that's why I don't go. But like I said, the most important thing is actually the settlement statement. What do you guys say on that, Dan?
I would agree. I mean, and look, I'm not saying that there's benefit into being there, because that's the last time you're going to see somebody. Yeah. It really is for a while. Now, with the new era, new way that we do business, most people don't find somebody, I mean, there's referrals, but they find them online a lot now too. And so I don't know. I think it does help, but I don't know if it's like moving forward. I don't think it's going to be like detrimental to your business. I don't think so.
No. I agree. I don't think it's detrimental. I mean, if you can't make it, as long as you're looking at the settlement statement, which I do too, I always try to get it in before they sign.
Right.
So if they do call me with questions, I already know what they might be asking about.
Gotcha.
Well, Jennifer, I just want to say this time went by so fast. I actually had fun. I'm sorry for jamming all these questions down your throat, but we just didn't have so much time. But I do appreciate you coming out here today, and hopefully we can bring you back for another segment. I think that would be fun. And the other thing is, guys, if you guys want more information about Jennifer, I'm going to have a link in the description below. And if you guys are a first-time home buyer, please reach on out to her. I will have her contact information in the link in the description below. Also, we have a new video that's coming on out, which is how much money you can make as a licensed real estate agent out here in Las Vegas. So I just literally launched that video at 6 p.m. or it will be in here in the next 30 minutes on Chakits 2.0. So check that out. We have a new channel. If you guys haven't had a chance to subscribe to that channel, I would highly encourage that. Also, if you guys are interested in financing, visit lvhomeexperts.com. Click the financing button and we'll route you over to Dan French with Guarantee Rate Mortgage. Start your application today. Other than that, thank you so much. Until next time.